Okay, so Mr. Aman Arora, okay, just a moment, okay, I am taking this. Give me some questions. Amazingly, it works out on less than 6% by your method. Yeah, I think Aman Arora, you are very smart. Okay, you have already calculated out, so I don't have to calculate. You have calculated it out. Okay, just a moment. Aman Arora has given a very interesting product. Mr. Aman. If you have calculated out and if it's correct, then I will not do that. Okay. The very popular schemes ask for 1 lakh annual for 15 years. Okay, like this. Then from 20th year, they give 20 lakhs annual for whole life. Approximately 1 crore at 100. So now, amazingly, it works out to less than 6% by your method. Okay, this is the mother. This is the method. All other methods are cheating methods, right? Somebody, like, I have seen a comment in some social media, people are laughing, like, so this, he will teach you how to calculate out crores using a Google spreadsheet, right? You see, all the big projects, I have done it, thousands of crores of project. Calculation happens here, okay? You cannot calculate out here. And we do not believe in any other calculator because this is the mother. All the calculators, everything ultimately based on this. Excel. Excel is the thing in finance, right? And this is the method. There is no other method. All other methods are cheating methods. Understood? Okay, so now, Aman Arora, what is 1 lakh? Okay, Aman Arora, now tell me, which one is 1 lakh? Aman Arora, please, one by one, one by one. Let us do this. This is a very 20 year, they give 1 lakh annual for a whole life. Okay, 1 lakh annual for whole life. Okay. Okay, this is like this, same 1 lakh annual whole life and approximately 1 crore at 100. Okay, 1 crore at 100 means, yeah, Aman Arora, are you with me? Aman Arora. Aman, Mr. Aman, are you with me? Aman? Oh, sorry. Okay, okay, just a moment. So now this is total is 100, right? So means from today for 100 years, am I right? From today 100 years, is it correct? Aman? Okay, fine. So now you are giving 1 lakh, same here, 15 years. Then after that, from 20 years onwards you are getting. Now this will be less than this. Okay, fine. Okay, let's 20 years, right? Just a moment. Okay. So now from 20 years onwards, you are getting 1 lakh, and at the end you are getting 1 crore. Am I right? So now you will not get it, somebody else will get it. Like, your successor will get it. Am I right? Aman Arora? Your successors will get it, right? Your kids or whoever. Okay, fine. So here is 1 crore. 1 crore. Okay. So now this is much more lucrative, looks like. You see, 15 lakhs you are investing and you are getting 1.8 crore you are getting. What is the ROI you are getting? 4.35%. Right? Now you see, if you have knowledge, but you will have to have knowledge, right? If you have knowledge, and if you invest in mutual fund, but you'll have to have knowledge. I'm telling you, you cannot go like, just without knowledge, okay, we'll invest. You will lose money. You will not even get 4.35%. But if you have knowledge, you can really make around proper knowledge. You can really make around 12%, 10 to 12% easily you can make. Okay, you can make much more just by using mutual funds. Okay, so we'll discuss a little bit more on Sunday, right? And you say 4.35%, your money is going down the drain. Even considering that 1 crore at the end, right? And this Excel file, your Excel file, my Excel file, NASA's Excel file, they will give the same results. NASA also use this when they go to Mars or when they go to other galaxies, right? They use this to calculate the project viability. Okay, so now get 1 lakh per year, I get 12 like okay, 3 crores last 80 age. Okay, Mahendra Mahatta. Mahendra, Mr. Mahendra, okay, I'm taking your question. Okay, just a moment. One by one. You see, IQMS, you see, you will have to go step by step, right? The main problem is when you try to understand everything like in 2 minutes or in 3 hours, or if you are, it's not like that. You see, this just to protect your money, you have to, how many hours you have spent just to understand how to protect your hard-earned money. Okay, so this is how you'll have to go. Okay, advising doesn't work. Why advising doesn't work? I'll tell you, don't worry. First, let me answer these questions. Give me different kind of questions such that do not give me similar kind of questions. So here is Mr. Mahendra, right? Mr. Mahendra. Mr. Mahendra, okay. 5 years paid 1 lakh per year. Okay, 5 years paid 1 lakh per year. Okay, fine. Then after that, get 15 year. Okay, Mr. Mahendra, be with me. So 5 year you pay 1 lakh per year. Then this is what get 15 year get 1 lakh per year. It's 15. This is what 15 year. Okay, 15 year you will get 1 lakh per year after 15 years. Okay, from 15 years. Am I right? Yes, Mahendra Mehta, from 15 year, 15th year. From 15th year, you will get 1 lakh per year. Then next 12 years, 30 lakhs per year. Means 15th year, you will get 1 lakh per year. No, I am not getting it. 30 lakhs per year. Is it 30 lakhs per year or 30 lakhs just one time? No. 5 lakhs you have paid. Then you see 12 years come before 15, right? 12 years. So from here only you will start getting. So you are getting, you are not getting. Okay. I have paid, you have paid 15 lakhs. 15 lakhs, okay, you don't have to say that. How much total you have paid? You just give me cash flows. 5 years, you have paid 1 lakh per year. So for how many years you have paid? For how many years you have paid? 5 years or 15 years? 15 years, okay. Okay. So now, okay, fine, okay, it's a typo mistake, okay. 15 years paid 1 lakh per year. Okay, then after that, then next, give me the next sentence. 15 years you have given 1 lakh per year. Okay, fine. 15 years means the same. Okay, then after I got 1 lakh per year for 15 years. For now, for another 15 years, you are getting 1 lakh per year. Okay. Then 15 years, then next 15 years getting rupees 1 lakh per year. Am I right? Then next 12 years getting 30 lakhs per year and 3 crore at the age of 80. Okay. 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 So now at the age of 80, last 80 years. So you'll have to give your age now. Here you'll have to give me age. 3 crores. Okay, yeah, fine. 3 crores at the age of 80. So at the age of 80, right? So 25 age. Okay, so 25, then 26. Okay, I am doing both. Okay, just a moment. So I am giving age. Okay, guys, it is very important. Huh? Very important. You see, like you will see, like what happens actually. Here is the period. (25, 26) up to 80. Oops. Okay. Okay. Okay, just a moment. So now this is 0, 1, 2. Okay, just a moment. Just a moment. Don't jump. Okay, be with me. So now this is fine. 15 lakhs you have paid. Okay. So 15 lakhs you have paid. Okay, one by one. Sorry, just be with me. So 15 lakhs you have paid here. Then after that, then next 15 years getting 1 lakh per year. So from here onwards, we are getting 1 lakh per year. Okay. Correct? Correct? Yes. Type Y. This is 1 lakh you are getting. Okay, fine. And then you are getting this for 12 years, right? So 12 years means 28 till the 28. Okay, this count is how much? 13. You have got 13, so you'll have got 12 years, right? 12 means up to here. Up to here. Okay, so this is the 12 years. This is the 12 years, right? So after that, 1 lakh 12 years per year. 15 years are getting next. Then for 12 years, you are getting 30 lakhs, 30 lakhs. Am I right? From here, you are getting 30 lakhs, 30 lakhs per year. 30 lakhs, 30 lakhs. From here, from your 53 years of age, from your 53 years of age, you are getting 30 lakhs, 30 lakhs. 55 years, okay, 54, 55. I think, there is a gap here. Here is a gap, here is a gap. So from here, you are getting 30 lakhs. 30 lakhs. And then you are getting 3 crores. Okay, this is good. This is okay. 15 lakhs plus 15 minus. Okay. There is something else. Okay, this there is something missing somewhere. So from the 41 years of your age, you are getting 1 lakh, 1 lakh. Then after that, there will be from 56 years of age, you are getting 30 lakhs, 30 lakhs. And then you are getting 3 crores. Are you sure this is what you are getting? How much is the IRR? .79%, 13%. Please check it. Right? There is some ifs and buts. Is this guaranteed? Is this guaranteed? Is this a guaranteed? Is this guaranteed? Yeah, there will be some ifs and buts. Yeah. Because this looks to be too good to be true. Okay, please check it. If it is like this, then okay, also please let me know. I'll also invest here. Okay, if it is guaranteed. Okay. Okay, Mr. Aman Arora, IRR doesn't have any time component. If IRR is 45% in 10 years, then it is just 4.5%. No, it is not like that. Aman Arora, do not mix it up. Simply because you say 45%, IRR is 45% in 10 years. No, it is not like that. You'll have to the way we have calculated out, it is like this only. You cannot do this calculation. This is a wrong method. If somebody does this method, then it's not good. It's not the correct method. You cannot do this way. IRR is 45% because IRR comes out to be per period. if you're taking the cash flows per period, so here periods are 8 years, right? So your IRR already it will come as per year. Okay, whatever is the cash flow period, your IRR will be that. If it is per month, it will be per month. If it is per day, then it will be per day. Okay, so you cannot calculate it this way. Aman Arora. Okay, so do not. It's not good. Like it's yeah, it doesn't work that way. Okay. Yeah, it cannot be 30 lakhs, maybe 3 lakhs. Yeah, might be like I don't know. Okay. Yeah. Okay, so if we consider tax savings, will there be any change in the results? You see, taxes are, if you, in case you join my next level course that we'll discuss on Sunday, so taxes are actually not very significant when you are investing for long term. It's very hardly, depending on your how long, what is your investment period, it will not be more than 1%, right? So if you are getting 11%, 12%, then for because of taxes, you will get 11%. 1% you'll have to pay. Okay. So this is because people unnecessarily give a lot of weightage on tax, but ultimately it's very small amount. When you do actual practical calculation, then you will see the percentage wise, in terms of percentage, it is not that big. Right? Impact is very less in terms of percentage. In terms of amount, it is very huge. Okay. At the end of the period, after 20 years, when you have to pay tax, it might be huge. But even if you do the calculations in terms of percentage, it is very few, very small, less than 1%, in fact, 1% or less. Okay, Sumita, I request you, can you please suggest me some good books for learning basics of finance, investment, mutual funds, share stocks, etc. from basics? You see, being from engineering background, okay, so now you see, if you're really interested, you can join my next level course. We'll discuss that on Sunday, where I cover everything, and it's very practical because I'm from practical field. Okay, so I have been into equity, completely into equity. I have done everything in equity market. Okay, designing IPO, pricing IPO at what price it should come, selling IPO, buying IPO, restructured companies. One company I have made twos, and sold the shares, designed it, did block deals, did everything. Good, bad, ugly, everything I have done in the stock market. Okay. So now what I have used, if you ask me, I have read only classic books. Classical books means textbooks, MBA textbooks, CFA textbooks. I have read only textbooks, and whatever I am giving, so that's all out of my practical experiences, right? This course and my next level course, so both the courses, that's completely out of my practical experiences only. Right? So really speaking, I don't know any such books because I have been since the first day I came out from my MBA school, I have started doing equities. Okay, so this is how it is. Okay, so our IRR calculation just needs equal periods, which may be days, months, of years. All will be same results. Yes, Aman Arora, yes. IRR always it depends on the periods, right? It depends on the periods. Okay, periods is month, your result will come in month. Periods are in years, your results will come in years. Right? Last amount is okay, fine. Okay, yeah, Mahendra Mata, now you know how to calculate it out. So please do calculate. Okay, Mr. Mahendra, sir, please do calculate. Okay, a lot of questions have come. Okay, I am going to the last one now. Sumita, textbooks is, you see, these are textbooks, right? So textbooks are textbooks. Okay, so now you see, if I ask me textbooks, then I can say they are very classic. They are very classic. They are very theoretical. From there, you'll have to really extract the juice. Prasanna Chandra is there, financial management. I am Pandey is there. So these are basic finance textbooks. Then after that, there are a lot of books, so many. According to you, is a good ROI for what horizon of time? Okay, you see, Krunal Naik, Krunal Naik, sir, what according to you is a good ROI and for what horizon of time? You see, Krunal Naik, So this is a very broad kind of question. It's very difficult to answer. Like if you ask me, like, what I suggest, you see, like, when we invest, I do invest only in mutual fund. When I was working at that point of time, I was investing only in shares. Today, I'm not in that industry. I'm out of the industry. Okay. And I know exactly what happens in the share market, right? All these guys that keep on talking, right? They haven't gone there. So I was there, that side of the table. As I have said, I have done everything, good, bad, ugly about share market. So I know what actually happens in the share market. Okay. So that is why I do not invest in share market directly. I invest through mutual funds. Now, when I invest through mutual funds, there are different categories of mutual funds. Different categories of mutual funds. There are different, like, so many. And they give different returns, different results over different period of time. So when you are asking me good ROI, so it is almost like asking you, tell me, advise me a good fruit. Okay. So now you do not have answer. What is a good fruit? Right? Since you do not have an answer, same is true with mutual funds also. Right? So you need to understand different characteristics of different mutual funds. We go very scientifically because you see, markets are manipulated, let me tell you. But there are methods. You can avoid that. You can minimize that. Okay? You can minimize that. Because so many things, like, I should not speak here in a public forum. Okay? So because I was there, I used to do so many things, right? Like any stock market guy, hardcore stock market guy, not those who are trading, those who are the other side of the behind the screen. Okay? So they understand what happens actually, how things are manipulated, right? So that's why we invest through mutual funds. And again, it's very difficult to say what is the return. Now, for me, 12% minimum return you must earn. But for that, you'll have to have knowledge. If you do not have knowledge, then you'll have to satisfy yourself with fixed deposit rate. Do you have any other option? No other option, right? So if you know, like, every time you go out, you buy an apple, you cannot go wrong. But when you are buying a mango, buying an orange, you may go wrong. Okay, you do not know. You must know whether it is the right season, whether it is the right time for mango or for orange. Got it? So this is like this. Password problems, please help us with the help of your team. Naga, if you are, no, passwords are very clear. Okay, everybody is accessing it. I don't know why you cannot access it. Why, like, I think, you are not following that. All the passwords are there in your group itself. Each and every password is mentioned in the group itself. Right? I don't know why you are facing problem with passwords. Everybody has finished this course. Same group, same communication. Everybody is getting. Okay, if you are, like, having problem with your bandwidth, I don't know, that you check. Okay, I am coming to the last one. Okay, got it, Mr. Naga. And if you have any problem, who has the problem? What is the problem? You just this thing. You put a screenshot and post that screenshot to the admin. She will take care of it. Okay, and she is very active. Like, she will definitely take care of it. I think, you must check your this thing, bandwidth, internet connection. Using caps lock, yeah, I think, I don't know, like, if there is something, tag guys are there. Excessive for different peaks, you are excessive from different peaks. Okay. Okay, anything else? Any question? No, yes, no issue for password. Yeah, passwords are working, like, all the passwords are there. Passwords are case sensitive. Yeah, please remember this, passwords are case sensitive. It is written out there. And you see, normally first we started that we'll give only password, one password. After that, we'll not give any password. You'll have to find out the password. But we found a lot of people, like, they have the problem. When they have the problem, then we started giving all the passwords one by one. Okay, because those who are really, want to take the challenge, we give them an opportunity. Okay, those who are not, like, for them, we give the password. First password, first day, second password, third day, third password. All the passwords are there. Don't worry. Yeah. Okay, so any question? Anybody has any question? Anybody has any question? Thanks, Srinivasan. Thanks, my pleasure. No. Different password, like passwords are different. One password will not work for all the levels, right? Because it's a game, right? It's a game, beautiful game. So you give first password, you watch the video, and then you do the quiz, then you get the second password. It's almost like a video game. Okay. This live session you can access. This will be there. Yeah, of course you can. This session I am recording, you will get the access. Okay. So it will take some time for processing. Once the processing, we will try to upload it today itself. So otherwise tomorrow morning, definitely early morning we'll get it. No, Aman Arora, IRR depends. Okay, I think Aman Arora, please listen to me carefully. IRR depends on the period. Now here, so that here in this case, IRR depends on the period. Okay, here this is year. This is years, right? So we haven't done anything in months. Years, right? So here, okay, they are all years. IRR depends on the periods. If the periods are months, then you will get it months. Okay, we have not done any months. We haven't done anything in months, right? So if the periods are months, then you will get in months. Then you have to multiply it by 12. Right? If it is in weeks, then you'll have to multiply it by 52 because in 1 year there are 52. Right? It is like that. IRR depends on the periods. Okay, then after that you'll have to convert it. Got it? Okay. Thank you, Mr. Rajnit. Never thought investment logic would be so easy. Yes, it is very easy. Right? I'll make it easy. Just once, your recorded classes time period can be made shorter and crisper. Okay, we are Srinivasan. We are trying to do that. In fact, we are updating it. Thanks for your suggestion. Earlier, also a lot of people suggested it. So, yeah. In fact, we are next batch will get our next version. So we are doing that. Okay. Thanks, Ata. We have got this suggestion, so we have done it. Already recording has been done. Only thing is that we need to do some editing. And we need to upload it. Okay. Sumita, you see, Udemy course is not very effective. And I do attend myself lot of courses, but it is ultimately, you need somebody who will be able to speak. Okay, so this is very important. Okay. Yeah, I do a lot of courses. And so for a businessman, successful businessman, this is the secret. They become successful because for each and everything, they have a mentor. Almost all a businessman, at least new age businessman. Okay. So I was working and then I started my business. I had mentor for everything. How to give training, I have a mentor. Right. So this is necessary. Otherwise, it becomes a knowledge. When your mentor is that, then he will really take you. He will tell you, okay, do this, do that. For marketing, I have a mentor. Okay. So there are different kind of, for video making, I have a mentor. Right. So this is necessary. Udemy is okay, fine. Yeah, it is Udemy can add up, but really hand-holding can be done only by a mentor. Ashwini, if you want to more, then you'll have to join my next level course. Right? In the next level course, I mentor you till your life. Me and my team. So next level course is a lifelong course. And every Thursday we meet. And it is not like, you are typing and I am speaking, not like that. We really do discuss. We really do discuss and we really create plans and everything. Got it? Abhijit, I am new to investment. Do you have a team that can advise which stock to start investing for beginners? Abhijit, okay, let me tell you one thing. We do not suggest investing in stocks. We do study equity market, but we do study equity market because we invest in mutual funds. Equity mutual funds. We do not invest directly in stocks because you see, I myself, despite spending 20 years in stock market, and it's not like, going and doing trading. No, I was an investment banker. So I used to do all the background, behind the scene, good, bad, ugly works, right? Despite that, since 2016, I haven't invested a single penny in direct stocks. Because I know What happens there? We invest through mutual funds. Okay, so that you will understand once you join next level. And you see, today I promised you that from tomorrow onwards, from today onwards, nobody will be able to cheat you, right? Did I keep my promise? Did I keep my promise? Did I keep my promise? Everybody tell me. Okay, everybody tell me. Okay, I kept my promise, right? If you have done it sincerely, you have understood it. Okay, from tomorrow onwards, from today onwards, nobody will be able to cheat you. Nobody will be able to sell you a product which gives 4% return. That looks beautiful, but it is not. Okay, nobody will be able to do it. Same way, in my next level course, my promise is you will not have to ask anybody for advice. You will advise. That is my promise. You ask me, like, you have a team to advise? No. You will advise. You will advise everybody, your friends, your family. That's my promise. I will make you that much expert. And let me tell you, today I am so proud. People not talking, I have a lot of CA students, right? They have started investment business after doing this course. I am proud of those guys who are IT engineers, quit their jobs after doing my course, not this course, next level course, and they have started their investment business. Okay, so I am so proud of that. I'm so proud of them. Okay, so that's done. So you don't have to ask anybody. Nobody will advise you. You will advise everybody. That's my promise after finishing the course. Now we will discuss about next level course on Sunday. Okay. What is the good in MF? Sir, you got to make clear what is the good in MF. What is that good? You see, what is that good means, can you be precise? Mutual fund investments are done in equity only. No. Okay, so there are a lot of mutual funds questions. Okay, let me briefly, I'll tell you, okay? Then we will get full returns, right? Okay, just a moment, okay? Mutual funds investments are done in equity only. No, there are difference. If we do direct investment stocks, then we get the age. If we do investment via mutual funds, then we will not get the full return. Okay, Ashwini Vasmi, that is true. Provided Ashwini Vasmi is asking this thing. Srinivasan, can you just clarify, extend this question, your question? I am answering Mr. Ashwini Vasmi. You see, Ashwini Vasmi, why I am saying all these mutual fund managers. So I was an investment banker, I was an analyst, right? What we used to do, we used to call up the MD or the CFO or the investor relation officer, whoever, okay? And we used to visit the companies, we used to speak to them, we used to visit their factory. After that, we used to take 2-3 months to decide whether we should buy that particular company or not. Okay? And the analysts are paid very handsomely. Huh? Okay? So now, after that, we take a decision. That today, since I am out of the market, today nobody entertains me. Since nobody entertains me, I do not invest in stocks directly. Got it? So what happens? So since I do not know what is happening that side, and if in case you join my next level course, you will understand in the workshop why we should not invest directly in stock, because so many things happens. All the technicals, they are artificially created. Let me tell you, that's the real fact. That's the real fact. Okay. So now what happens now when we invest through mutual funds? Now, why mutual funds? I'm going to tell you this also. Of course, this is this belongs to my next level course. Okay. Since you have asked, I'm going to give you, it will take so long, but briefly, I'm going to tell you mutual funds, about mutual funds classifications. Okay. Now, when you invest in mutual funds, you need to be clear where you are investing, because there is mutual funds are not just mutual fund. There are different types of mutual funds. What are these types? Equity mutual fund is different. Then there's a debt mutual fund. There is a money market mutual fund. And there's a mix. Mix are called balance and hybrid. We do not invest in mix because we have knowledge. What knowledge we have? Equity mutual fund, there are so many types, not names. Names are unlimited. Looking at the name, you do not know. Looking at my name, you do not know how am I. Okay? Just interacting with me, knowing my background, you know, okay, this guy is an analyst, this guy is a trainer, this guy has been an investment banker. Right? So that way, in equity, what are the type of equity mutual funds we use? Index, broad index, large cap, mid cap, small cap. We use them. Okay. Why use them? Like, you know, then you'll have to give me another 8 hours. Okay. Okay. Now, second, debt fund. In case of debt mutual fund, somebody said, like, you know, all the mutual funds invest in equity. No. There is a debt fund. In case of debt mutual fund, there are long duration, mid duration, short duration, low duration, ultra low duration. There are money market fund. You see, all of them are good, but not all of them are good at all the time. That's what I have discussed in level 4. Okay, those who have gone through level 4, so there I have discussed this. So you need to understand the valuation, right? Depending on the valuation, like all the fruits are good. Orange is good, mango is good, but they have season. Right? Sometimes mango is good, but it's not always good. Sometimes orange is good, but it's not always good. But same way, all the mutual funds are good. But problem happens, 98% people lose money. Note it down, 98% people lose money because they do not know which fund to invest at what point of time. Understood? That's why they lose money. So we need to have all this knowledge. I have given you a lot. Okay, all these things we discuss in the next level. Since you have asked, I have told you all this stuff. Okay, so you must master it. Once you master that, again in Sunday also I will throw some light. Please do not miss that. Okay, so once you master it, then you will be able to really earn superior returns. Got it? Now what happens once we know? Okay, so we need to eat mango. The inside information, the fund manager, mutual fund manager who invests in equity, it is his responsibility to speak to the company, to visit the factory. It is his responsibility. Our responsibility is to choose that right fund. Because somebody who is an equity fund, he will invest only in equities. He will not invest in debt market. If he invests in debt market, then those who have invested here thinking that it's equity, they will sue. They will sue him. They will drag him to the court. Got it? So somebody who said, okay, I am a large cap fund manager, he will only invest in large cap. He cannot invest in small cap. Remember this. Got it? Because there are a lot of people, they only want to invest in large cap stocks only. So if I have said I am a large cap fund manager, I will invest only in large cap fund, whatever is the market. Market might go up, might go down, but I'll invest only in large cap. Okay, we'll discuss a little bit more on this on Sunday. Mutual fund investment versus direct fund. Okay, what is the big advantage of mutual funds? Yes, Srinivasan, I tried to answer it. Okay, in case you join my next level course, then you will understand clearly. Okay, and let me tell you. Okay, Bruce Lee said, I am scared of people who practice one kick 1,000 times. I am not scared of people who practices 1,000 kick one time each, right? So we do master mutual funds. And let me tell you, just by mastering mutual funds, you can earn a lot of money. But if you just go here and there, but we master them, okay? We master, right? But if you, without understanding, if you go here and there, then you will belong to 98% people, okay? Okay, why mutual funds return generally after third year deep? It's not like that, Aman Arora. Okay, there is not such generalization. It's not just third year or something. Okay, don't get into all these things. It's not like that. It's a completely different ballgame. These are like, you know, all the general public talking. Don't fall into that. Okay, Krunal Naik, yeah. So now here is one live example, Krunal. You see, like, you know, I'll tell you, okay, there are so many things, like, you know, in our next level, we discuss all the, like, you know, nitty-gritties. In fact, ugly things in the stock market, right? So here, I'm not, because on the next level is like, it's a lifelong association, right? So we are there together for life. So here, okay. So I think, it's not proper if I discuss all this stuff. Okay. Okay. So now only thing is that what I mean to say, be cautious while investing directly in shares, avoid. Master mutual funds, understand mutual funds properly, invest through mutual funds, right? Advanced level course is not Hindi, sir. It's in English. But again, in the Q&A session, somebody asked me in Hindi, I answer in Hindi. As I have said, I have been looking for some faculty, good faculty, right? So who can deliver it in Hindi. What about ETF? You see, ETFs are good, but it is not. If you master mutual funds, then you will not do ETF. You see, ETF is like, suppose ETF is basically index based. Okay, ETF is basically index based. Like, you can get an ETF of mid cap ETF. Okay, so mid cap, suppose, whatever, Sensex 100 or Nifty 100 or some ETF, whatever. Okay, cannot remember all of them. So now, when we invest in mid cap, suppose we have taken a decision looking at the market situations, looking at our goal. Let's say everything is goal based. Okay, so we do not go randomly. Kuch bhi kharid lo, no, not like that. Okay, so we are very specific. You will come to understand on Sunday. So suppose we are buying a mid cap fund, right? In case of mid cap fund, those mid cap funds that we will choose, their returns are much higher than index. Understood? Okay, those mutual funds in mid cap segment we will choose, they will give much higher return than the index. ETF will give return exactly like index. Okay, so that's why we do not invest in ETF. Understood? Did I make sense? Understood? Because ETF you will not get. ETFs are index based, and the good mutual funds that we choose, they are much above the index. Okay, so that's why we do not invest in ETF, we invest in mutual fund. Nifty index fund is safe and good because generally we are betting on Indian economy. Yeah, that's true. So this is the most conservative. Nifty index fund is the most conservative. Okay, so yeah, sometimes we do invest in Nifty index, not always. Wondering how Warren Buffett and Rakesh Jhunjhunwala made their fortune by investing in stocks market. Ashwini Vasmi, you say this is not very difficult, but only thing is there are a few things. First thing is that you have knowledge. Second thing is that you have discipline. And the kind of hard work they do, particularly Rakesh Jhunjhunwala, I know, right? So the kind of hard work they do, kind of information they do. So this is like, they do not do trading, right? So if you know exactly their portfolio and their history, they invest in stocks when nobody is looking at them. They have that understanding. So they have the connection of lot of analysts. All the analysts keep on feeding them, and he pays them, right? And like, they are a completely different league. Only thing is that we are impatient. First thing is that we are impatient. First thing is that we do not want to take acquired knowledge. Okay, these guys, they invest so many. Okay, Warren Buffett keep on saying, okay, first have knowledge, invest in yourself, then you go outside, right? So first you'll have to have knowledge. After the knowledge, you will have to have courage. Lot of people have courage, but lot of people have knowledge. Okay, knowledge is, there are many people who are much more knowledgeable than probably Jhunjhunwala. But courage and discipline, they are missing. You must have courage, right? So if you can, because you have conviction, okay, so this stock is going to do well because of this, you must have courage to sit on this, even if your investment becomes near zero. People do not have that courage, even after having knowledge. Okay, so courage, discipline, and knowledge. All the three things somebody has, then he can do that. It's not that difficult. Got it? We will discuss in the next level course patience as well. Yeah, because I do not have patience, right? Let me tell you, okay, I do not like which each stock doing. Okay, I don't want to do that. Okay. So like, I'm very impatient. So I always look at the broader market. And I was known for that, for my experience on broader market. That's why I always suggest mutual fund. With that knowledge, investing in mutual fund is easy. But when you are investing in its individual stocks, you need to really, okay, it's not that easy. People think investment is like sitting like this. Okay, you see, when I was working, like sometimes we used to sleep only for 2 hours or so. So, and during the result season, and it has become a routine. Like all the analysts, they fall sick. It's not that easy, right? People think like it's very easy. Yeah, so they are paid well. But the thing is that it's very hard work. Today you are here, tomorrow in a Chandigarh, next day you are in Coimbatore, like in a remote place, you are visiting a factory. Next day you are in Kolkata, not Kolkata city, like you're somewhere. Okay, it's that kind of work. It's not easy, man. It's knowledge plus a lot of hard work. Hope to get some benefit from your knowledge. Definitely, I'll try my best. Okay, that's what I'm doing. Right? Looking for our advanced service. Yeah, we'll talk about this on Sunday. Okay. Any question, guys? Any question? Any you want me to calculate it out? Anything you didn't understand? Any kind of question regarding investment? You can ask me. Otherwise, we will meet on Sunday. No question? If no question, what time on Sunday at 11 a.m.? Sunday at 11 a.m. Okay, so this is going to be, we are going to discuss, that is going to be an awesome session. Let me tell you, financial freedom, we are going to discuss 5 steps to financial freedom, as well as we will talk about my next level course. Okay, so that day you will get an idea. Okay, and I'm going to show you the part. Don't worry. I am going to show you, I am going to tell you what you need to do, what knowledge you need to have to achieve financial freedom. I'm going to tell you everything. Yeah. Okay, thank you so much, guys. Your nice words. Okay, so please finish the course, everybody. And again, one more thing. Okay, I know there are only 40 people here. Okay, I know like a lot of you guys will join my next level course. Okay, I know very well, right? And there are a few people who will not join my course because of whatever reason. Okay, but still, because of whatever reason, okay, you do not join my course, but you want to be in touch with me. Okay, I have kept a provision. This is free of cost. You do not have to pay anything. I have got a Facebook group. This Facebook group belongs to those people who came here, done CPC Crores Planners Course. And then after that, okay, you want to be in touch with me. You feel like this knowledge is important. Okay, for that, this group is there. I will share the link. I will Poonam will share the link once this session is over. And please join that group. Do not send me WhatsApp messages. Today also I have got couple of WhatsApp messages asking me advice. Okay, you see, this is not practical. Anyway, let me tell you, I do not have access to the WhatsApp. Something happened in the system. It's all system driven, computer driven. Something happened. I haven't seen the WhatsApp, in fact. Okay, so I cannot access it. So we're trying to fix it. So this is how we manage. But you ask me question in the Facebook group, I will answer. Most of the time, it is answered by those people who have joined the next level, because they become an expert. Right, so they answer it. If they do not answer, or if their answer is not up to the mark, then I will answer myself. Okay, so this is what I do. So join this group free of cost. Okay, connect in LinkedIn also. Sumita, LinkedIn, I am as of now I am not very regular. In fact, I am very irregular in LinkedIn. Hardly I visit LinkedIn. Right, but most probably I will become active, because we are doing some marketing through LinkedIn. Now we are using only Facebook and mainly Google and Facebook. LinkedIn also we are going to. So once we start marketing in LinkedIn, then I'll have to be there. But as of now, no. Once in 2 months, 3 months, I visit LinkedIn. Okay, because I get my people here itself from Google. Got it? Yeah, definitely you can connect me. Yeah, why not? Need to practice on returns calculation. Any source you can suggest? Aman Arora, I am giving you this link I am giving you. Okay, this Excel sheet. And let me tell you, okay, of course, this time the batch is small. Okay, normally every Q&A session, I solve so many, 10, 15 different kind of problems I solve. But this time, like, the batch is very small because of, I think, holiday season, because of that. So we solve only few, right? 3, 4. Okay. So, but anyway, in fact, this will also give you a good resource. That itself is a good resource. Please use this, right? And let me tell you, as I have said, okay, I studied all the classical books, all this Prasanna Chandra, Ayam Pandey, and all this. So then another is Samir Barua, but they are all very classical, very theoretical. So many statistical models are there. Okay. After that, I started working. Okay, and all my courses, this next level course, and again I am planning some other courses also for some other purposes. All are from my practical experience only. Okay. Okay, so you will get it. Okay, Aman Arora, where will you send the link? A link will be sent in your group only. In your group, you'll get a link. Okay. Yeah, thank you, Mr. Naidu. Thank you so much for your nice words. Thank you so much. Right, you will be an expert. Don't worry, Aman Arora. Okay, why? I can see you, and I can guarantee you. I can guarantee you. Why I can guarantee you? Because the kind of inquisitiveness, kind of curiosity you have shown, I am 100% sure you will master it. That is the most important aspect. Right? If you have it, then you will dig it out from anywhere. I am 100% sure. You will master it. Okay, again, another, okay, let me tell you, there is one more very important site called Investopedia. Investopedia, I believe, right? So that is a very important site. You will get a lot of knowledge there also. Investopedia, I think, right? Okay, Smita. Whenever I visit, I'll look at it. Okay. Okay. Thank you so much, guys. So do not miss it. See you on Sunday. Bye bye. Thank you. Good night. Bye. See you on Sunday. Do not miss it, please. This will be like an awesome session like today. It will be another awesome journey in different direction. Right? Thank you. Okay, good night. I am signing off. Thank you so much. Good night.